The stock market and most likely your FOMO are both touching all-time highs this week. If you look at the calendar, we're about 2.5 months away from midterm elections, and technically that's only 55 trading days away. Now, if you watched my content before, you know that I'm expecting a correction on the indices somewhere between 10% or 20%, somewhere around there. And I'm not making this up. The precedent has been set by the last four midterm years from 2010, 14, 18, and 2022. Now, all of them took different types of path moving forward, but I think if we can understand the pattern and the path that those took, we can predict the next correction that might be coming up on SPY. And if nothing happens, it is what it is. But if we have the ability to predict a 10 to 20% correction, I don't know about you, but I would like to take my shot at it, right? And here's the disclaimer. I'm not touching my long-term accounts or any of the ETFs that I've been holding, but I have accumulated some extra cash so that when the market does correct, I will have the ability to go in with size. And especially if you are sitting back and predicting it way ahead of time, you also know that the path leads to an all-time high right afterwards. So you're not in the middle of the panic wondering what the heck to do. So let's go back to 2010 and figure out what happened and why am I predicting a correction. So if we look at this chart, you can see that we are very much correlated to 2010. We saw an early year weakness that broke into an all-time highs, and then we went into a 10-ish% correction and then bottomed out right between June and July time frame, and then eventually made an all-time high leading into the next year. But the correction happened a lot sooner than I'm predicting right now. You can see that in 2010, we bottomed out between January and February time for the earlier weakness. And in 2026, we were down between March and April timeframe. So you can say that we were about 2 to 3 months early in 2010. But overall, when you look at the pattern, everything is playing out just exactly the way it was in 2010. It's just all of this price action that we're seeing in 2026 was crammed between January and April timeframe. But we'll still have to see what happens next. So let's put that on the side and let's move to 2014. Again, the year started with earlier weakness. Of course, we bottomed a little sooner than we did in 26. We continued higher to break an all-time highs. Well, one thing that was very similar in 2014 is that we topped right around the same time frame. We tried to come back into a pullback, but then broke out again. And you can see on the purple line that that is what happened. We kind of hovered around the all-time highs during September and started going into the correction and then bottomed out in October. And again, by the time the elections came around, the market was already recovering and the bottom was printed because the uncertainty was already priced in and it was already out of the way. Market hates uncertainty. Let's move to 2018. Very similar thing, a little bit different. We saw the early year weakness, not too much, just a little bit. The weakness stayed on for quite a long time, and then we went on to break all-time highs again. We did go into a correction right before the elections, but then when we tried to recover, I don't know if you were around in 2018, we had this huge government shutdown issue. Everybody was panicking. I know it's a joke at this point that, oh, government is shutting down. Nobody really cares. Nobody even knows who's unemployed at that time. But back in 2018, it was a huge issue. So the market, instead of recovering, went into a deeper correction. So this is a great time to pause and realize that we can be wrong. The market could take a totally different route. So we have to take our predictions with a little bit of a grain of salt. Let's move on to 2022. Let's overlap this. And this was a bear market year. So obviously we saw the early year weakness. We tried to bounce a few times. But notice that overall, we did try to push higher between July and August time, which we're doing already. And then we went into the deeper correction, which I think from here, August to the October time, it was about a 10% drop. And again, we bottomed out right before midterms. And by the time 2023 came around, we were already touching all-time highs. Now, the cool thing about all four of these years is that if I overlap them, you can see that between June to October, each one of these years saw a correction. Doesn't matter how deep it was, roughly about, I can say, average of 10%, but we saw the correction happen. And if I remove the 2010 year, you can see that all three last midterm years were crammed around October timeframe. So we are still hovering around all-time highs like we did in the previous midterm years. And SPY is not one of those stocks that just breaks out, liquidity sweeps, and comes right back down. Whenever we break an all-time high, we hover around that area before we go into a pullback of 1, 2, 3%, or even 5 or 10%, right? So SPY is doing what SPY always does. The reason I started this video by saying that your FOMO is all-time highs is because SPY is not coming down anytime soon. It's going to take a few more days, maybe 2 to 3 weeks, could be just 1 or 2 weeks before we come down and start headed into the correction, if this time we do the same exact thing, and that's a very big if. And we all know markets don't do exactly what everybody's predicting. Markets like to do the opposite of what everybody's expecting. So I don't know what's the consensus out there, but the only question I think we should be asking is, are we ready for a correction because it is so predictable? On one hand, are we ready to just sit through a pullback with all the stocks that we're holding? And on the other hand, are you ready to buy some new positions so that you can profit maybe on the short term or mid or long term? Because it will give a great opportunity to scale in. I know every time the market drops about 10 to 15%, I like to go into my favorite stocks, and usually within next 3 to 6 months, I am coming out of those trades in pretty good profit, and I'm expecting the same thing this time around in 2026. All I want to say is that do not complicate it. Keep it extremely simple. Block out the noise, because what's going to happen within the next 2 to 4 weeks, if we start going towards a correction, is that you'll see some type of news emerge. It's going to be a scary news, it's going to be a panic, and people will be able to justify that the correction is here because of that particular news. But overall, in general, markets just do what markets gotta do. And I'll give you an example right now. If right now the market drops 10%, people will find news about the Iran war, the Strait of Hormuz, or any one of these news and say that that is why the market is dropping. But in reality, that might not be the case, because right now we are going through all of that news and the market isn't dropping. And I'm just taking an example because I want you to understand is that human beings feel so much safer when we can justify something. When you're sitting in the dark and you hear a noise, as scared as we are, we want to look around and see what it is, because if we can see it, we can justify it. And so same goes for market. If you prepare right now, you know this is about to happen, you will not have to be the one wondering what news or what catalyst is breaking the market. You just already know that this was coming, and it does not really matter what the real news is, right? So with that being said, I really hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.